Heliostar Metals is listed on the TSXV under the symbol HSTR and on the OTCQX under the symbol HSTXF. Joining us today is the company's CEO, Charles Funk, who will be going through Heliostar's June investor presentation. This will include an overview of current operations, recent achievements, and upcoming milestones. At the end of the presentation, we will open it up for questions for management to address. If you are interested in asking a question and are logged into the GoToWebinar app or web platform, you can submit your questions to us directly in the question module. Please note, this presentation is being recorded today, Tuesday, June 22nd, and will soon be made available on the company's website. And lastly, RBMG is not a registered investment advisor or broker-dealer. For more information, please visit rbmilestone.com. And now I'll hand it off to you, Charles. Charles, the stage is yours.
Perfect. Thank you very much, David. Thank you very much to RBMG for hosting us. And most importantly, thanks to everyone watching and listening today or later on from our website or on YouTube. It's exciting to give you an update of the progress that we've made, particularly to help explain the results that we released last week, some tremendous results from the Unga project. You'll note today that we will be making some forward-looking statements. You can find a full copy of this or take your time to read this on our website. For those not particularly familiar with Heliostar prior to our recent results, you'll notice that there's a few things that I think help us stand out as a company. The first is the team that we've put together. You know, we have a very strong track record of discovery, of financing, and of all the way through to mine construction, which is not particularly common for small teams. We have a spectacular set of projects, with the Unga project being extremely high grade and with the focus of today's presentation, and some earlier stage, but still potential company making projects in Mexico. We have a very tight share structure with only 37 million shares on issue. And with a capital raise in April this year, we have 7.2 million Canadian in the bank. And so that sets us up really strongly for what we want to achieve as our next goal for the company. And that's a pathway to 1 million ounces at Unga. We think that comes with a significant re-rating, and that's an important milestone for our company as we go along the journey of ultimately putting Unga back into production. And I think management, you always need to look very closely at the team that are behind the companies that you're investing in. And so I won't spend a lot of time here, but I think you can touch on three areas with a board, a very strong board for a company our size. And that is, you know, very strong financial and investment banking expertise with our chairman, Jacques Vaillancourt and George Ireland. Excellent technical expertise with myself, Alan Wilson and Ken Booth. And then real mine building experience with William Lamb. And so we've got a plan for Unga to expand the resource and go through permitting and then put the mine back into production. And our board's done every one of those steps along the way. Heliostar was a new company that we founded through a merger mid last year. And the next key thing we had to do was build out the team that's actually driving the company forward today. And we made a number of critical acquisitions of very talented people. Most notably, Sam Anderson joined us from 17 years with Newmont. He's really driving the Unga project at the moment, and he's got that full range of experience from early stage exploration in Haiti to mine work in Nevada to grade control drilling in Suriname. So a wide range of experience from Sam that's really valuable at the moment for us. And then Mahesh Lahanagay, our CFO, Stuart Harris, a very seasoned exploration manager, and a lot of you might know Rob Gray, who's our Senior Communications Officer. He runs our IR and has had considerable success in his past in companies in exactly this stage. So if you're investing in Heliostar, you're investing in a management team that's done all this before. And I think that's really critical as you come into these bull markets and you see less and less experienced management teams. If you look at our share structure from a corporate perspective, I mentioned the 37 million shares on issue. That's only 42.7 million fully diluted. And if you have a look at the breakdown, I think the key thing, first of all, is the very strong alignment between us and the board and management and any potential shareholder. You know, this is the company that we want to build our reputations with as management, and if we're so fortunate to make some wealth as well. We have Eric Sprott as a 5% shareholder, and in the 2 raises we've completed as Heliostar, we've really increased the institutional position notably. You know, we've enjoyed excellent support from the Phoenix Gold Fund, K2 in particular. We also have the likes of Crescat, Broma, Four, and a number of other smaller funds that we've brought into the book. We also picked up our first coverage from Michael Gray at Argentus. Michael's, you know, got an excellent reputation and a really detailed knowledge of what we think are the more exciting plays in the industry. So I encourage you to look at Michael's work with Argentus. And so all that I often say is a long-winded way of saying that, you know, we've got our house in order as a company. We think we've got the fundamental building blocks right so that we can unlock the potential in our portfolio. And our portfolio clearly starts with Unga. You can see here on the right, it is a remote project. It's about 900 kilometres to the southwest of Anchorage, but it's very accessible. You can see the major airstrip at Sandpoint. You can land a 737 on that airstrip. It's got daily commercial and charter flights, and it has regular barge trips. We've mobilised a number of our equipment out of Seattle, and in fact, a lot of people in Sandpoint shop in Costco and get it delivered each week. So accessibility is quite high. It also comes with another very strong feature that most people don't expect when you talk about Alaska, in that we have a very long 9-month field season. We were underway in early April. We drilled until the very end of November last year. In fact, our first results last week were coming out when most people were just mobilising in this part of the world. And that's because being so far south means it's an incredibly temperate climate. You get a lot of rain, you can get some pretty good storms come through, particularly in the winter. But from an exploration and ultimately mine construction perspective, it's a very accessible place to work. Then the next key point is we enjoy a great relationship with the 3 native corps that we deal with, or the native corp being the Aleut Corp, which we have a 7-year exploration agreement and a built-in 20-year mine life. That's a built-in lease option, and that comes because the Aleut Corp own the subsurface rights. Then our project's on 2 islands, one Unga Island and the other one Popov Island. And we have ongoing surface agreements. We just extended the Unga agreement for 3 years, and then the Shumigan agreement's rolled over every year for 10 years. So we're very thankful for our partners, and we enjoy a very strong relationship as we look to push the project forward. Lastly, something that will be a focus of the conversation today is that this was the location of Alaska's first underground gold mine at the Apollo mine. And so it means there's a history of mining on the project, but more importantly to us, it's a huge opportunity for us. And so when we came in as the new management team in mid last year, we saw a huge property with lots of upside. And for those who aren't following live, we're looking at slide 8 from the corporate presentation. What you can see is a project that's got, you know, nearly a sort of 10 by 7 mile block on Unga, another 3.5 by 3.5 mile block on Popov Island. That's just full of alteration and gold prospects. There's porphyry targets, there's bulk tonnage gold targets, and there's high-grade veins. And so we think internally, the best way that we can unlock this district is by focusing on the 4 areas that you can see in the green, with the green boxes in the graphic. That's the SH1 resource. It's AQUILA, Apollo, and Centennial. And the reason we think they're going to drive that first 1 million ounces is because of the high probability nature of them as targets. SH1 is 384,000 ounces at 13.8 grams per tonne, extremely high grade and wide open to expand. Apollo was the news we put out. We drilled just over 3 meters at 88 grams. That's nearly 3 ounces of gold. Spectacular intercepts stepping out underneath the old mine. We made a discovery at AQUILA last year, high grade in a step out target that we're following up this year. And then lastly, Centennial's a non-compliant resource from the 80s. So the probability of success on targets like this is very high, and that's really what attracts us to Unga. There's incredibly few projects that have these kind of open intersections just sitting out there to be expanded upon. And we think 1 million ounces is our first goal, and if we can deliver that, then we've got the whole rest of the district to explore. It really is a very large district with very little exploration. So I'm skipping over the geology that's available on our website. I'm going to focus straight away on SH1. So what's really attractive to us about this resource is that look, it's shallow and it's a wide vein. The vein comes to surface and's got holes in it like 17 meters at 24 grams gold. We did a number of shallow holes last year and returned excellent results, as you can see on slide 10. But I think the critical thing is the deepest hole in the resource is 5.5 meters at 24 grams gold. So this year we have 3 drill rigs on the project. One of those is a diamond rig, and that's just systematically stepping out 50 meters under these intersections. And if we have success on those holes, we'll step down again. So we're trying to get to sort of 0.5 to 1 million ounces as a goal at SH1. And just a reminder again, that's nearly 0.5 ounce resource. It's an extremely high grade resource, which will transfer to being a very high margin deposit, which should produce extremely high cash flow when we finally build the mine. I'll go back to go forward with our next target, Apollo. I've jumped to slide 12 on the corporate presentation. The old mine, as you can see here in its heyday, produced 130,000 ounces of gold at 10 grams per tonne. But they ran into a problem that's well shown on slide 13, that for us is a big opportunity. So the mine produced from the late 1880s into the 1920s, and they were very profitable at the time. They mined from 3 parallel veins, as you can see in the northwest in the shaft 1 area. But they had a problem that as they got deeper, they started getting base metals. They started getting sphalerite, galena, chalcopyrite with the gold. And at the time, that meant that they couldn't recover the gold. It was too complex for them. And so they drew that thick dashed line there, and they said everything above this is easy to mine gold, and everything below this is complex ore. And so if they'd have managed to keep that mine going for another 10 or 15 years, they would have been around when flotation was invented. That makes it extremely simple to produce from this kind of ore. There would be hundreds of mines around the world that do this. I think I've personally probably been to about 30 in Mexico. And so not knowing that they were never going to find more free milling gold, they did exploration the way they knew. They sunk shafts and they drove tunnels. And so in the west, it's shaft 1, in the middle, it's shaft 2, and in the east, it's the Sitka shaft. And then they drove these tunnels across, and they blocked out ore. They said, we found the vein, we can track it on 3 sides in a level down the shaft and in another level. And have a look at some of the information. 20 feet, 8 meters wide is noted in shaft 1, 8 to 12 feet, 3 to 4 meters in shaft 2. 100,000 tonne block described there. In fact, they went one step further in shaft 2, and they estimated that the ore would average 3 grams gold, 250 grams silver, and 10% combined lead zinc. That's about 8 to 10 grams gold equivalent today. And incredibly, despite the old timers telling you exactly where it is and what the grade is, no one hit those veins until our drill program last year, and more particularly this year. Part of that was not much happened for 50 years after the mine closed. And a group in the 80s attempted to drill it. And so if I just flip forward to slide 14, you can see on the inset graphic a whole series of black collars to the north. That's 14 holes that drilled exactly where an old map told them that they should drill. And we really scratched our head about that because the geology and it just didn't look like they hit the veins. And so we went and found exactly where those collars had been drilled to rule out that it was a registration error in terms of a coordinate system. And then we went back and we found the origin of these old maps. It was quite fun, at times frustrating, but ultimately now fun detective work. And we worked out that the old plan map that they were drilling was drawn about 15 years after the mine closed. We think it was drawn from memory and isn't perfectly accurate. So we attempted to solve the problem with a slightly more simple approach this year. We thought, if you look at the orange collars for our drilling, let's just drill fences of holes across the shallow area of the vein until we can define that vein. And so we had immediate success on that. In the first hole, we hit the clay alteration that told us we were close. In the second hole, we drilled 88 grams gold over 3 meters. And maybe even more exciting, 500 meters to the east, we hit 4 separate veins in one hole. 4.5 meters at 8 grams gold, another 4.5 meters at 5 grams gold equivalent. That's the base metal part of the vein starting to appear. Another 10 meters at 8 grams, including 4.5 at 19 grams, spectacular width and grade. And then a fourth intercept of 1.5 at 10 grams. So we think we might have the tiger by the tail here at Apollo. We've got a 2 kilometre long trend. We've now drilled over 30 holes as of today. We're waiting for assays on 26 of those. We're continuing to drill. We're continuing to hit veins. And so for us, we're just trying to flesh out how exactly the parallel veins might be associated and understand where the veins are higher grade and lower grade, as naturally happens in these systems. And then if you refer back to the long section on slide 13, you can see with the green arrow that we've only tested, first of all, the first 140 meters below surface and only approximately, a bit under a half of the trend. So if we can continue to produce results like we did last week, we're very bullish about Apollo. We think we could easily be in the 1 million ounce range just at Apollo. We've got a lot of drilling to continue to do, but using the old map as a guide with the recent results, we're very excited about Apollo, and that's going to be a real focus for us going forward. A third target that I'll mention is actually our VPX's favourite target. It's another area to the west of SH1 that you can see in the inset in slide 16. And it had some very good work done in the 80s. Look at the gold values, 10 grams, 6, 11, 30, 25, 30 grams spread over, not short of a mile, just a bit over a kilometre. And for any geologist listening, a great dilation zone where ore shoots form. And so we drilled that last year, and we got 17 meters at 2.2 grams, including 5.7 meters at 5.5 grams. So excellent first drill hole. We've now, if you look at the map on slide 17, we worked out that the vein, the most interesting vein, there was 2 veins we hit, was dipping to the south, and we only got that in one hole. So with the blue diamonds on slide 17, we're systematically stepping underneath and along strike to grow that discovery. And so we've already completed 5 holes at AQUILA and have a number more planned because we think it's a really exciting target as well. So you can look from the Unga project to deliver significant news flow over the next few months. We're well ahead of schedule at over 4,500 meters of the 7,000 meter program completed. In fact, we think we can significantly exceed that 7,000 meters with our current budget. Our focus is expanding the resource at SH1, then doing that exploration and step-out drilling at AQUILA and Apollo. And if we can flesh out a framework for 1 million ounces with that program, then the logical thing is to come back and, come back and drill that off next year and actually deliver that resource at the end of summer next year. And for us, that sets up a longer term plan where we can then commence the environmental studies, the financial modelling and the permitting that will come before putting Unga back into production. And then in parallel with that, we can unlock the full potential of the district. It's incredible the targets that sit on the project. In fact, Sam told me a couple of days ago an amazing statistic. At the end of this summer, outside of the resource area on Unga, we will have drilled more meters this summer than in the entire history of the project. And I don't think anything explains more clearly how underexplored the project is than that. So if we can get to 1 million ounces, then we can really grow beyond that after a significant re-rating in our share price. And that should allow us to advance to production as quickly as possible and then unlock the full potential of the district. So Unga's clearly our flagship, but I'll just mention very briefly, and I'll touch on 2 targets. We have an earlier stage portfolio in Mexico. Unga is receiving 6 million Canadian of funding this year, but we did contribute 600,000 at the beginning of the year to advance our projects in Mexico. We're drilling at La Lola. We're expecting our second set of results any day now. But we just put out some very good news on Oso Negro. Oso Negro is sort of between the Silver Tigers El Tigre deposit and Silvercrest Las Chispas deposit. We sampled an outcropping vein, with highlights as high as 1.2 meters at 1400 silver equivalent. But maybe more importantly, there's 360 meters of strike that has an average width of 1.3 meters, typical mining width in Mexico, with a very high grade of 420 grams silver equivalent. Now that's extremely high grade for silver mines in Mexico. There's little workings down sort of tens of meters, but it's never been drilled. And so we'll definitely be coming back here later in the year. And we think we're likely to drill at Oso Negro, probably Kumaro, and then depending on results, how we might go at La Lola. Lastly, I'll touch on one more project on this very quick fly through. We own the Kumaro project 100%. It's in the yellow outline on slide 25. We've mapped it and sampled it and got, on the continuation of the Basatigi vein, we've got good gold. I was in a working a couple of weeks ago that was 100 meters long. And then in the east, we've got a down-thrown block with some perfect pathfinders, the low-grade silver on the Dos Amigos extension, or the 390 gram silver sample, some really high grade that tells you that there's a good target at depth. We also know it's a good target because we're completely surrounded by Silvercrest, who have 3 drill rigs active at the moment. They announced just over, around a mile to the northwest, 21 holes with an average width of 4 meters and an average grade of 8 grams gold. And so Silvercrest and Heliostar share this district, and we'll put some news out on the more mapping, and I think we're likely to drill this later in the year. So our Mexican projects are earlier stage, but each could potentially be a company maker. So our current focus is on delivering at Unga. We saw the first lot of results last week, and we'll look to continue that over the 7,000 to 10,000 meter program, and then we'll work on the Mexican projects at the end of the year. So just a reminder before I pass back to David and open up for questions. I think a proven team that's done this before, a very tight share structure that gives a significant torque to success, and some really exciting high-grade projects, and some really high probability targets on those. So it's already proving to be an exciting summer, but we hope and think internally that this could be the transformational summer as we demonstrate that pathway to 1 million ounces. So you can find us on the TSX under HSTR. You can find us on the QX on the OTC under HSTXF. And David, happy to throw it back to you to field questions.
Thank you, Charles. If you're interested in asking a question and are logged into the GoToWebinar app or web platform, you can submit your question to us directly through the question module, and we will now take a moment to develop the queue. So let's just take a moment and just hang on, and then we'll begin Q&A.
And so while some of those questions are coming up, I'll answer a question that we're commonly asked, which is we've taken 2 RC rigs and 1 diamond rig for a total of 3 rigs up to the project this year. And RC is not particularly common, David, it's not well used in Alaska. It's very commonly used in Nevada and in Australia and places like that. and it's giving us a tremendous advantage. The upside of RC is that you get very quick drilling. The speed of drilling is a lot quicker. It produces very fine rock chips. It doesn't produce you the cylindrical core that most people expect. The other thing it gives you is a bigger sample size. So when you do have coarse grain gold, like we have, particularly at SH1, but it also looks like in some parts of Apollo, the samples are more representative. The downside is that you don't get those preserved pieces of core to look at the textures. We're actually offsetting that out of interest by using a televiewer, a camera that goes down those holes and takes a photo of the outside of the hole and creates a digital version of the drill core. But the reason that we took them was we thought that when we're just doing that first pass reconnaissance on a number of our targets, particularly Apollo and AQUILA, it's more important to get lots of holes in and learn quickly, and then we can come back and drill deeper, and also the odd infill hole with diamond. So it's worked tremendously well for us this year. I think it's a technique that should be used more often in northern Canada and Alaska, but it was a decision actually originally came from our director, Alan Wilson. It was a suggestion, and it's proving to be a real advantage for us.
Terrific. Thank you, Charles. All right, so we have some questions. First one, do you own any part of NVX or Red Lake properties? And if you do, what is the plan?
So we were formerly a minority shareholder in the Newman Todd project in Red Lake. Red Star was originally focused in the Red Lake district, hence the name. So when I joined late last year, we exited that minority stake. We converted it to a cash payment, and I think it was approximately $650,000 cash payment and 1 million shares. And so we continue to be a shareholder of Trillium Gold. We also, as a legacy, did have a shareholding in NV Gold, a prospect generator company in Nevada that was very closely aligned with Red Star. We've since exited that stake. We're using that capital on our project.
Okay, thank you. Number 2, can you comment about the future potential to spin out the Mexican assets?
That's a question we get a lot. The reason we put the portfolio together is we think we have a knack as a management team of finding really exciting projects at really good prices. You know, we own all our projects 100%, which is not common actually for companies our size. And so at the moment, we're quite happy with both in our portfolio. As I mentioned, we're really excited by the potential of those earlier stage projects in Mexico. But there may come a time down the path where we've got 2 different investor bases. We might be much more advanced at Unga, and we might have an earlier stage portfolio in Mexico. Or potentially the best of both worlds. We have success in Mexico, and the capital requirements for both becomes a challenge. So we've got, at the moment, I think there's more meat on the bone in Mexico, and we'd like to proceed to drill those. But there's definitely the possibility, at least there's the potential to corporately spin those off and create 2 different vehicles as well. So it creates great optionality for our shareholders. It also gives that counter-seasonal balance. Even though we have that long 9-month field season, there's still a perception when you're based in Alaska or northern Canada on seasonality. So the short answer is at the moment, no, we're very happy with our portfolio, but we constantly review that for value to make sure that we are getting the best valuation out of our assets.
Great. Is there consideration for acquiring partners for development?
Good question. We've had that conversation a lot. In fact, at one stage, a couple of years ago, Red Star was actively looking to do that. I don't think we need to at this stage. You know, if we can grow that resource into that into that 1 million ounce range, you know, that would be a very high margin, you know, 100,000 ounce a year for 10-year producer. And so you can typically, these are very broad brush strokes, but you can build those kind of, we can build this mine for about 200 to 250 million US. As I mentioned, the accessibility is great. You can barge everything in. You've got to be organized, but the cost to do it wouldn't be as prohibitive as a significantly inland project. So no, our current strategy is to push ahead ourselves. We think we've got a tremendous project that's only going to get better. And we'll see there. We've got copper porphyry targets. If we hit on the porphyry targets, maybe that's a conversation we revisit. But for the high-grade gold, we're very comfortable pushing ahead by ourselves.
Okay. What's the current thinking on how various targets on Unga would be mined?
Another good question. So at the moment, the most likely scenario is a high-grade underground mine. You know, we've got robust widths and excellent grades. So that's where we're mostly thinking in the most likely scenario. But there are some other options. You know, there is potential for bulk tonnage targets. We're nowhere near at making that decision point. So we have a lot more drilling ahead of us to ultimately decide what that looks like. And just as importantly, we have a lot of consultation with our partners before we decide how that would look. But we could make a very profitable high-grade underground mine on the evidence of what we see at the moment.
Okay. Are you doing metallic screening on any of the recent Apollo holes? And if so, what is the ETA on those results?
Yes, we are. We noticed that, you know, one of the unique things about this deposit type, it's called intermediate sulfidation, which means it's base metal rich at bottom, then base metal gold, base metal silver, silver gold, gold only at the top. So you get a full spectrum over, we know of it, at least 500 meters vertically. And so what we weren't expecting to get those kind of very high grades at Apollo like you do at SH1. They were a very pleasant surprise. So yes, we are doing metallic screens. They're coming back slower, so I'm not sure whether they'll be another sort of 3 to 6 weeks. They will take some time. They're also difficult from a reporting perspective because you can't put standards in metallic screens, but we'll definitely be using them internally to understand the nugget effect that might be with the high grade. I mentioned before that there's this simple version of gold rich at surface and more base metal rich underneath. But in the drilling at Sitka, we've noticed it's more complex than that because we've got gold rich veins, right, with a base metal rich vein in between. So we need a lot more data to understand that, and collecting metallic screens is part of that process.
Okay. All right, we're going to take one more question. You have said that your immediate goal is to establish proven assets of 1 million ounces. So what might be a realistic goal beyond that?
That's a dangerous question to answer. I think there's it's a dangerous for the CEO to answer. You know, we think this district is a globally significant intermediate sulfidation district. You know, you look at the scale of that and some of the comparisons. You know, renowned experts like Jeff Hedenquist, who was on the project in 2016, compared this to Comstock in Nevada. A number of people have compared it to Cerro Moro in Argentina. These are some pretty significant, you know, 5 to 10 million ounce deposits. Michael Gray initiated his coverage with a headline of high conviction of 3 million ounces, and Michael has a very strong pedigree. So I think that multi-million ounce range is definitely a longer term target. But as I touched on, you know, we are going to drill more meters outside of the resource on Unga Island than's ever been drilled in its history. So we've got to do the work to show that, but we think let's just walk first and deliver 1 million ounces, and then we'll look to run and show that multi-million ounce potential. I hope that gives some guidance without putting me too much on the spot.
No, that's perfect. Thank you, Charles. And thank you everyone for joining today's webinar. Today's webinar recording will soon be made available on Heliostar's website. And if you should have any additional questions that have not been addressed on this webinar, please feel free to email us at heliostar@rbmilestone.com. Again, that's heliostar@rbmilestone.com. Thanks again, and you are now free to disconnect. Thank you, Charles.
Thank you, everyone. Thanks for listening.